Hey everybody, know my line. I'm Sally Moses here. I'm here with our resident personal finance expert, Dr. John Beckham. How are you doing today, JB?
I'm doing excellent. How are you doing today, Noma?
I'm doing great. So I chased you down because I really wanted to hear from you about this tax plan that everybody's talking about, or a bill that's to be passed to change the tax plan, and you can talk more about what exactly it is because ordinary people like me are not too well versed in that. So when you heard about the tax plan, what were your initial thoughts?
Initially, I'm thinking about some of the promises that President Trump made during his campaign, which was pretty much to lower the taxes for corporations. Because of their high tax bracket or tax rate, a lot of U.S. companies that also have offices or satellite offices or franchises overseas
Mm-hmm.
do not want to bring their dollars back to the U.S. and claim their profit because of the amount of taxes that they would have to pay on that.
Right.
Some known as repatriate their dollars. And so what he basically promised to do was to lower the corporate tax rate to 20%. I think he might have even promised 15 to 18%, but now we hear he's settling on 20% for the tax code, as well as it supposed to give some incentives for, they say middle class, but it's really the upper class. And there is whether you agree with it or not, there is a methodology or a outcome that they're seeking, right? So
Mm-hmm.
if we look at this from a holistic, before we even get to some of the nitty gritties, if we look at this as a holistic, we got to say, well, what are some of the issues that we're having right now?
Right.
So number one, we have companies that are leaving the United States going overseas.
Right.
And that can be for various reasons, right? Cheaper labor, more loose or lax environmental requirements or regulations,
Mm-hmm.
as well as the cost of goods.
Mm-hmm.
Now, even though they're U.S. companies, they go overseas. But what do they do with the profits that they're making? Most companies the government would like for them to not only keep some jobs here in the U.S., but to then take their profits and reinvest it into, the companies or the American companies that are represented here,
Right.
whether that be offices, franchises, or so forth. And with the hopes of it's going to stimulate the economy.
Mm-hmm.
Right now, our economy is being supported by debt, basically from quantitative easing that happened during the Obama administration, which was had to happen as a result of some of the things that might have happened during George Bush Jr. presidency with the subprime mortgages and things of that nature.
Right.
And so President Obama kind of inherited that, and he was being reactive, and that's where we get the quantitative easing, where the government decided to bail out banks and basically pump a lot of money into the economy to kind of spur employability, companies hiring and so forth.
Right.
Well, you fast forward and we right back at that same scenario where quantitative easing has already taken place, but there still is a need for people to be employed. There still is a need for our economy to grow. And so how do we do that? And so the thought pattern is, or thought process behind that, or school of thought is that if companies are able to keep their profits, that they will be able to reinvest those profits into the company, which stimulates the economy through the creation of new jobs, research and development, and by people getting more jobs, then they're able to buy more things in the market, whether that be television, whether that be food, whether that be housing, and so forth. So
Right.
the whole intention is to kind of boost the economy to not being so heavily dependent upon debt, but to actually be producing something
Okay.
and to be putting people back to work.
Okay.
Um, Another thing is that there's a school of thought that feel like is the elite also have a tax break these are the ones who have small businesses.
Mm-hmm.
And with that small businesses, they're able to pay less taxes, then they too will also reinvest in small businesses, which means that they will hire more people. It's actually small businesses hire the most people in this country and not big business. And so that is the chain of thoughts that is taking place as Congress or Senate or the House propose the tax plans. Now, one of the things that could happen that maybe the Democrats or other school of thoughts believe is that just as the quantitative easing or the bailing out of the banks, they really did not pass the dollar back to the everyday Joe and Blow. They actually gave the executive bonuses. So
Mm-hmm.
one might say, well, if we allow these companies to keep more of their money, if we give tax incentives or tax breaks to those who are already wealthy and rich, then they would just either keep it for themselves or maybe pass on those extra dollars to your shareholders, to the people who own stocks through what's called dividend payments.
Right.
And so that's kind of what's really sparking this whole conversation. And we see that the proposed tax plan has passed through the House and it's also passed through the Senate. But
Mm-hmm.
they're actually two different tax plans, right?
Right.
Who are the breaks going to be given to? How are they going to be manifested? What deductions are being taken away? And so right now they're trying to come to some type of agreement of what actually is going to go into law. And that's kind of that sets the parameters, if you will, or the backdrop to what's sort of happening. Now there's a lot of things that I often wonder, right? And it's just me sitting, in the confines of my own thoughts saying, wait a minute. There's a school of thought that says, and some of the Democrats are saying, well, we don't want to have any tax breaks. We don't want to lower taxes because then the government will have to borrow more money. It will go deeper into debt, which our children and children's children will have to pay off.
Right.
And so, here's my personal opinion in regards to that. So I believe that we have high taxes, whether you're paying ordinary taxes, self-proprietary taxes, passive taxes or whatever. We have high
Mm-hmm.
tax rate. Why not give a tax break and then do like every citizen of America has to do, create a budget with the income that you have coming in? So, it would be impossible to give people a tax break and keep the United States budget, our spending, exactly where it is. What I'm saying is give a tax break and then go into say, how can we make our government more efficient? How can we curb some costs, cut some costs, or eliminate some waste out of our budget? It doesn't have to be a either or. If we have a tax reduction, then we got to borrow more money. Your everyday American is taught not to think that way. So why do we give a pass for the government to think that way to the point where they say we won't give you a break on your taxes because then we have to borrow more money? I just think that's backwards thinking.
Right. So I was asking this question before we started recording, and I was just speaking to what I'm seeing, across a lot of social media pages. People are talking about this, how this new tax plan is going to really negatively affect both poor people and the middle class, and it's just going to benefit the I guess you can call them the high income earners, and the big companies and the elite in essence. So I wondered, without you saying that sometimes we have to think about the fact that if big businesses benefit or any businesses benefit from a tax plan, then in a roundabout way, the normal person also benefits because they have more chances of getting employed. But I guess my question is, how much do you think, if you're a poor person, obviously you're having a lot of challenges in life. What fraction of those challenges really is what Donald Trump is doing with the taxes?
Kind of repeat your question or rephrase it because I'm not sure if I'm getting a complete what you're asking.
Right. I'll ask it in a more straightforward way. If you're a poor person, right, you call yourself poor. Nobody's calling you poor. You call yourself poor, right? It means that you have challenges, right? You have challenges, primarily monetary challenges, but that always births other problems, right? So I'm
Right.
saying, how much of a problem really is what Donald Trump does with the taxes? How much of a problem is it for you, considering everything else?
Well, I don't think the conversation in regards to taxes, if you look at the rates, what they're proposing, right, I
Mm-hmm.
don't think it has a direct impact upon, let's say, the lower class or those who are in poverty, right? Because they're not really paying into the tax system. They're almost exempt because they're below a certain dollar income.
Right.
But indirectly, it can have an impact on them because if what's proposed actually accomplish what it set out to do with creating more jobs, then that gives the opportunity for those who are lower income or at the poverty level to actually be at work. So if we just are blunt about it, it's
Mm-hmm.
not your poor person that creates jobs or create housing or produces a product for society, right? They're
Right.
pretty much consumers, or in some cases, they might be a receiver of an entitlement program,
Right.
right? So then you say, well, how does it impact them? Well, either they're going to receive the same amount of entitlements, they might get more entitlements, or they might get less entitlements, right? So
Right.
that's a direct impact. Is the level of entitlements that they might receive. The indirect impact is if these companies who create jobs and create or have employers who pay for health care, or a company that develops, builds, or rent out real estate, they might see it indirectly through a job or more availability of lower homes or lower rentals, right? So
Right.
directly they're impacted by entitlements. Indirectly, they can be put into employment. They can have health care through an employer, and or they can have more affordable housing. So that's really how it impacts them. Other than that, it's really a mute case for the poverty or the lower class, because other than receivership, they're not going to be directly impacted. So, you can have that particular class saying, wait a minute, can we get more social programs, to pay for food stamp housing or whatever the case is? What I have is going to be reduced, or is it going to be taken away completely?
Right.
Because if we look at, and let's get into some numbers. So, you have two proposed plans. One comes from the Senate, and then the other one comes from the House. So the Senate says that anyone who's at a current tax rate of 10%, which is your income between 0 to 9,500 if you're single, and about 19,000 if you're married,
Mm-hmm.
that means that you had a 10% tax bracket currently. And really, under the proposed plan from the Senate, there will be no change. It will stay 10%. But then if you move to the next tax bracket, which is 15%, anybody who's currently paying 15%, which is the 9,500 to about 39,000 for a single, and about 19,000 to about 77,000 married, you then will reduce from your 15% to 12%, right?
Mm-hmm.
So that's getting into the lower half of your lower to middle half of your middle income.
Right.
If you had a 25% tax bracket, which is your 38,000 to 60,000 single, and about 77,000 to 120 married, you'll go from a 25% tax bracket to 22.5%. And then if you're anywhere in that big range, which is 25 to 28%, then you're going to be reduced just down to 25%. If you're at 33%, you're going to be 32.5%. And if you're at that 33 to 35%, they're going to round it off to be just 35%. And if you're at the 39.6, you're going to be at 38.5, which at that level, you're 500,000 or more single or $1 million married. So it's not that much of a difference. We're really talking about pennies on the dollar, but it can add up. What is more impactful is whether they will allow or not allow your local and state taxes to be deductible, right? Where currently what you pay in state or local taxes can also be deducted against your federal income taxes. That's more of the things that can be impactful. Whether or not if you have a mortgage, your mortgage interest rate, whether or not that's still going to be deductible. They're talking about eliminating everyone who has a student loan. You now can claim the interest that you pay on your student loan, right? You can claim that as a deduction against your taxes. They're talking about eliminating that altogether. So these are the things that are going to be absolutely more impactful on individuals, right? And then when it comes to the House, they just want to reduce the number of tax bracket periods. So you heard about all the tax brackets that we currently have. They really want to reduce it down to 4 brackets. If you had 10 to 15%, they just want to have it reduced to 12. If you had the 25 to 28%, they want to have it just 25%. If you had the 28 to 39.6, they just want to have it at 35%. And if you had 39.6, it's going to stay unchanged, right?
Wow. Okay.
So again, everyone is paying so much attention to what these brackets are going to be, and they're totally not looking at what deductions do we currently have that they're proposing to take away. Because the big overall plan is to reduce the corporate tax rate down to 20%. Right. So that's the real winner in this whole proposed tax plan.
Okay. And that makes more sense for somebody who doesn't really, understand the many intricacies of it. But I was very interested to know when I kept seeing people saying, well, what he's really doing is he's taxing the poor and he's taxing the working poor, which is the lower middle income families. Then I also have seen a lot of people saying he's really negatively affecting single mothers. And I wasn't sure what that meant either. Do you have any thoughts on that?
I don't see whereas what's been proposed in the House or the Senate, I'm not sure where they're getting that from, right? Because until we get a finalized combined tax proposal that goes through all of Congress and passed on, the small intricacies which that would include are still being worked out. They're being hashed out. So I'm personally not seeing where everyone is giving this, both plans doubled the standard deduction for everyone. So a single filer's deduction increased from $6,300 to $12,000. The deduction for married and joint filers increased from $12,700 to $24,000. So that's one thing that is being proposed under both plans. But there's a lot of eliminations. Both plans eliminate the personal exemptions. So where taxpayers who can currently subtract, a little bit over $4,000 from income for each person claimed on the tax return, that's going to go away. So, under this new Trump tax plan, families with many children will actually pay higher taxes, despite the increased standard deduction. So, and they give examples out of that. So if you have a married couple with 2 children making $56,000 a year, they will actually pay about $68 more a year in taxes. So where before, you were getting the deduction per child. So, I have 4 children, at home in my family. And so, I get at least those 4 children deductions, and they're kind of doing away with that and just now saying we're going to give you a standard deduction. So actually having more children actually harm you, where our current system tax rate, it actually helps you.
Wow. Okay. So, I could see how that could be applied to a single mother.
Yeah. And that's the only thing that I thought of when you mentioned that, right? What exactly are they talking about? But then again, like I said, these are not etched in stone yet because they're still being discussed and they're still being hashed out.
Okay. And in any case, it's always been more beneficial as far as taxes go to be married than not married. So that's really nothing new.
Right.
Um,
Exactly.
I just think that sometimes people do get into that what's now called fake outrage, where
Mhm.
just glossing over things and not really understanding them, but there's a lot of outrage. Where when you take the time to kind of look at it and understand it, there really is no reason to be outraged. Would you say that?
Absolutely, and especially before people really understand, what is really happening and what is not happening.
Right, right. I think that's great information for us to kind of put out there and have people understand. Before I let you go, I just want to kind of quickly remind people where they can find you. Dr. John Beckem has what is called the Life After Debt Institute, which is basically a lot of information about overcoming debt and building wealth for individuals and families in the middle income families and beyond. You can find that at teachable.com. And when you get to Teachable, you look for the Life After Debt Institute. Also, remind you that you can find Dr. Beckem at um, drjohnbeckham.com, drjohnbeckham.com, and there's a blog there that offers a lot of information. In fact, this segment will also go at that blog. And you can also follow Dr. John Beckham on Facebook. The page is Dr. John Beckham. Same thing with Twitter is Dr. John Beckham. And going back to the Life After Debt Institute, there is a series there called Ask Dr. Beckham, where Dr. Beckham answers questions. I'm often one of the people asking the questions, but also if you have questions, you can ask those questions on Facebook, on Twitter, or any other information that's put out. You can certainly go in the comments and ask those questions. Any final words, Dr. Beckham, before you go?
Um, I think we ought to do a follow up to this segment because if a person or family is looking for some type of relief through the government um, tax code, then they already failed themselves, right? So you hear this statement that the rich get richer and the poor get poorer.
Right.
And I ask the question: is the rich getting richer because of the decisions that they make, and is the poor getting poor because of the decisions that they make?
Right.
And so we really need to look at this internally and say, well, what can I do or my family do to really put myself in the best situation and benefit me?
Right.
To the point where no matter what the tax code is, I'm benefiting.
Right.
And I think that's a conversation that maybe we need to do a follow-up segment and discuss, because I think that people avoid their own behaviors that dictates the life that they're going to have or not have. And it's easy to point the finger to say, well, it's because of this, or it's because of the government, or it's because of the rich people. It's the reason why I'm in the situation, or my family in the situation that they're at. And I would say 100% it's always going to be very dependent or predicated on the decisions that you have made.
Right. I'm not sure if I would say 100%, but you certainly have more power working with your own personal decisions and your own actions and your own habits than trying to control what the rich or the government or anybody else is doing. So that's certainly an empowering thing. And as I mentioned, you offer a lot of information about how to manage your personal finances so that you're going to be able to thrive regardless of what the economy is doing or what the taxes are doing, and so on and so on. So certainly very,
Right.
very good information. So just want to say thank you. I call Dr. Beckham JB, but so thank you, JB, and thank you everybody for listening. We will see you next time.
Have a good day.
Thank you.